All right, hello, good evening, listeners. Welcome to another beautiful edition of your show, Real Talk with Kike. It is me, your ever passionate host, Kike Lomato. Now, that doesn't change. It's been an eventful week since I drew the curtains last week. A quick reminder, we haven't totally won the battle against coronavirus. Let's continue to stay safe and follow guideline. If you're tuning in for the first time, I say welcome. Please catch up by following us on Instagram, Real Talk with Kike, and subscribe to our YouTube page, Real Talk with Kike. So our Omoluabi session for today's episode is Oraje. This means economics and could also be translated as commerce. An expert in this field is known as an economist, and Omoluabi aspires to be an expert in every work of life he engages in. And on today's edition, we are looking at an area that we have not touched since the maiden edition, and potentially a contentious topic that is well addressed based on the aftermath of COVID-19 pandemic and the worsening effect of the lockdown on businesses and finance of Nigerians. Today, we are drifting into the business space and the financial environment surrounding the Nigerian economy. Arguably, Nigeria is in deep recession, which is as a result of falling crude oil prices in the world, and secondly, by the impact of the COVID-19 wave. As we speak, a dollar exchanges for almost 500 naira. The Nigerian revenue faced a shortfall of 60% in the last quarter, and the government has ventured into continuous borrowing from external sources. This has led to debate by financial analysts, the National Assembly, and even the concern of international agencies. To discuss this with me is a member of President Buhari's Economy Advisory Council. He's also an accomplished banker who has worked at several blue chip financial institutions within Nigeria and abroad. He is an associate of the Institute of Bankers, England and Wales. He has served on board of several organizations and many Nigerian banks. He is the chairman of the Finance and Risk Committee of the Board, Guinness Nigeria, as a non-executive director since 2008. He is Mr. Bismark Rewane. All right now we'll be welcoming our key guest for today. Welcome, sir.
Good afternoon.
Yeah, good afternoon, sir. It's a pleasure and worthy time to have you on the show to discuss this potential issue on the crisis that has befallen our economy and, of course, our balance of payments, exchange rates, and our debt in terms of relations with foreign nations. Thank you so much for taking time out of your evening to share with us today.
Good evening. Thank you for having me.
Yes, sir. So a quick one, I think is best to just go straight to the topic at hand. I know the debate has been going on and on about the Chinese loans to fund different categories of capital projects, and Nigeria will still be serving the Chinese loans till around 2018, which is the mature around what's it called? Around 2038. I hope I'm accurate. I stand to be corrected, which is the maturity date for the last loans obtained in 2018. What do you make of Nigerian saving debt and our current economic situation at the moment?
If what you're talking about is debt service.
Yes, sir.
Debt service is where you pay interest and principal on your debts. But what is most important to developing countries like Nigeria,
yes,
is what have you used the money for?
Okay.
And whether it will increase productivity on one hand,
okay,
and increase employment on the other.
Okay.
So if you're talking about Chinese loans, you have to look at the projects which they are funding.
Okay.
Rail projects, power projects, airport projects. All of these projects have strong linkages between sectors. In other words, if you are financing an airport, the airlines will fly in, duty-free shops will be there, the car hire companies will bring products and bring people there, the cargo companies will take products there. The courier companies will bring packages in. So it's a whole ecosystem. That is, I'm talking about airports alone.
Okay.
Now, if you talk about power stations, when they generate power, of course it helps. It powers, artisans. It powers the vulcanizers, the millers, the factories, the manufacturers, the hotels, and everything. So power is used by everybody, including the cement manufacturers and building and construction companies. So you take that as one, power sector loans. Take aviation loans. Take roads, for example. So the distribution cost of companies. If the Lagos-Ibadan Expressway is fully academized, it will take me 1 hour, 15 minutes maximum to go from Lagos to Ibadan. By rail, it's about even probably faster because, and so imagine the distribution of goods, imagine the passengers that are going there, imagine the products that are coming back, not just from Lagos to Ibadan, but from Ibadan back to Lagos. And it's going to continue all the way to Kano, through Abuja, or whatever.
Okay.
So is it important that you have these projects financed either by borrowing or from our own internal resources? We will not have the internal resources at this time, but we need to take advantage of this. And I think that is where you have to look at the international borrowing of countries in the context of their development plans. And that is what you are getting today.
All right. Thank you so much, sir. I think it's better for me to give you some instances or give you an examples. For instance, there's 7.4 billion of Zambia's total $8.7 billion foreign debt, which is being owed to China, representing a large debt burden. As many speculators are saying, Nigeria owes China about $3.1 billion, more than 10% of the 27.6 billion external debt stock. So my question is, do you think China may be taking over Nigerian assets?
No.
Okay.
The Nigerian economy is $430 billion.
Okay.
The total external debt of Nigeria, contractual debt, is something like almost $31 or $32 billion. It's not up to 10% of our GDP.
Okay.
We want to talk of our exports. Our exports in a good year could be as much as 48 to about $65 billion. It's not. So, but you are borrowing for a project that will have a lifespan of maybe 30, 40, 50, 60 years. Imagine if you borrowed to build the third mainland bridge. And it has been on since 1985 or something. If it's something that was produced, you would have gotten all your money back 10 times over. I want you to imagine if we didn't borrow, and yes, we didn't borrow for the third mainland bridge. If we didn't build the third mainland bridge at the time we built it, what would have happened to the congestion of Lagos today? The same thing will happen when you look at the Ajakuta steel mill and all that. Mind you, borrowing is not synonymous with China. We borrow from the World Bank. We borrow from the IMF. We borrow from the European Union. So there's what you call contractual debt and what we call tradable debt. And we have short-term credit as well. So when you put all of these things together, you begin to get the picture that borrowing is not bad as long as you are borrowing not for consumption, but for capital formation. And that these projects which you are borrowing to finance have linkages and multiplier effect, which creates jobs, reduces social unrest, and allows you to achieve so much more than you were achieving before the project was completed. Hello? Hello?
Mister?
Yes, I can hear you.
All right. So I said I'm glad you mentioned about the other sectors that we've borrowed money from, because I know that Minister of Finance Zainab Ahmed disclosed in February that the federal government decided to go for $17 billion loan from China as the World Bank and the African Development Bank failed to show much interest in Nigeria in Nigeria during the recession. So Nigeria has a potential stronger economy in Africa. What could be the reason for their disinterest?
No, I don't think that. I think the Minister of Finance was quoted out of context. That is not what she said.
Okay.
What she said was that the prudent thing to do is to diversify your borrowing.
Okay.
But we are looking for long-term concessionary lending,
okay,
because our debt service obligations are becoming a bit onerous based on the fact that the price of oil had fallen.
Okay.
So that is what she said. The important thing is it's not either China or something else. It is you are looking at a portfolio of borrowings, maybe $17 billion from China, so much from the European Union, so much from Japan, so much from the United Kingdom,
okay,
so much from the Commonwealth Development Corporation,
okay,
so much from other Eurobond market,
okay,
and so much from. So it's not either the World Bank and ADB or China. We are taking money as long as the terms of the borrowing are not onerous. They don't put us in a difficult and an unsustainable position. Because easily you can go from a debt solution to a debt trap. And when you go into a debt trap, you are in trouble.
All right.
I don't think that is what Nigeria is.
All right. So we would go to the debt trap. But before then, let me use this opportunity to open our phone lines. Please join us by calling the phone line 0700 923 923 or send us a message on 0817 313 6193. Let's hear your perspective on the topic at hand. If you have questions for our guests, please go ahead and hit us with all your queries and comments. So thank you very much, sir, for what you said earlier. Let me go straight to the exchange rate between March and August of this year. Nigeria's currency, the naira, fell by nearly a fifth of its value on the official exchange rate window, from 305 to the US dollar to 379 on August 21, according to data from the Central Bank of Nigeria, for a roughly 24.3% decline. What is the reason for this decline, sir?
No, currency markets are normally they are volatile by nature, and typically what has happened is that the 305 rate was not an effective exchange rate. It was an official exchange rate that was just registered as an official exchange rate. The effective exchange rate which Nigerians were using in the market was that of the investor and export window.
Okay.
Right, and that rate was 364, 365
okay,
by March. Now that rate has moved from 365 to 390.
Okay.
And probably, I would say, a 10 to 12% adjustment.
Okay.
But what has happened? Between March and now, in March, the price of oil was about $68 a barrel.
Sure.
It dropped all the way to 20, 25. Then we revised our budget to 28. You cannot have a situation where your export earnings drop that significantly without you making an adjustment. That adjustment was natural. And in fact, in the power market, the adjustment is even much more severe, as you know. And then we are trying to ensure that those rates converge and unite into an efficient, effective rate, which does not allow for subsidies in the exchange rate, because that subsidies are definitely dangerous for the allocation of scarce resources.
All right. So, sir, do we see an intended the evaluation in play as the CBI for CBN, or for instance, I know CBN allowed for dual exchange rate system, that is fixed and floating exchange rate system. So, what is do we see a purposeful evaluation in play?
No, I think what you're trying to say is a devaluation of the currency.
Yes, sir.
Devaluation are things that are done intentionally to adjust your currency back to equilibrium. No, I don't think there is an intended. What you have is a floating exchange rate, which reflects the fundamentals of the Nigerian economy at any point in time. And that is what you're seeing, right? So you have to understand it, and your viewers have to understand that currency adjustment is not necessarily, it may mean a devaluation or a revaluation,
okay,
depending on how what the market dictates. Because when the exchange rate went down, when the price of oil dropped to $25 a barrel,
Okay.
yes, you would have to make some adjustments. But now that it's climbing back up, it is possible that you may not have to make that kind of adjustment. In any case, you could adjust upwards rather than downwards. Okay?
All right. Thank you very much, sir. We have a question from one of our listeners. He said, "Good evening, Real Talk with Kike. Please, I would like Mr. Bismark Rewane to educate us on how the deregulation of the oil sector by the federal government will be beneficial to the common man now and in the long run." That is from Ayobami Okonlawon.
Okay, let me tell you something.
Yes, sir.
The deregulation of the price of petrol, if that is what you're referring to, PMS,
Yes, sir.
it's not new. Over 10 years ago, we deregulated the price of diesel. The price of kerosene has already been deregulated. The price of cooking gas, all of these things come from the same source. The PMS, if today the price of diesel, I think it was 190 last week, it's now 205, and then it goes in any direction. Nobody even mentions that. It doesn't even get to the back page of a newspaper, right? But the reason why you are doing this is because the PMS has been regulated, that is petrol, and has been subsidized, and therefore it is a source of pressure, a source of scandal, and a source of abuse. Now that it's been deregulated, you will find that people get used to that price and of the price movement, which is tied to two things: one, the price of crude, and two, the exchange rate. Just like every other commodity in this country. So I don't think it's just the beginning of letting the government stop regulating the price of the petrol, so that private sector investors can come and invest in that sector.
Exactly.
And do things exactly like we had when MTN and others came. They started at 50 naira a minute, and the SIM card was, God knows, about 10,000 or something.
30,000 naira.
Today SIM card is 110 naira. Or even free.
Yes.
And the minutes per second billing and all of that. So because of competition, because of private sector investment, the consumer is benefiting from telecommunications. That is how the consumer is going to benefit from petrol and the downstream refinery.
All right. Thank you for that submission, sir. You know, while you are talking, I can't help but ask this question because I feel that, you know, it's not even about what I feel. You know, sir, do you think the black market is helping the situation at hand, especially when it comes to the mechanism of regulation in terms of the effective on them? Because I feel that contributing to the inflation on foreign exchange due to demands, I believe that the black market could have contributed to the what's it called, foreign exchange at hand.
No, if I understand your question properly,
yes, sir.
What you are saying is that, do I think that the depreciation of the currency in the parallel market, yes, is having a negative effect on economic indicators?
Yes, sir.
Like inflation and all that.
Yes, that
is the question you've asked.
Yes, sir.
And my answer is that the reason why there is a parallel market,
yes,
is because the official market, the supply in the official market is not enough, and you are controlling the price in the official market. If you allow the price to adjust, what happens? One is that instead of buying $10,000, I will buy $5,000. Okay. Right? Two, I will not spend my time running around going to the black market where I probably will be buying fake currency and all sorts of things. Okay. Right? And secondly, because foreign exchange is expensive, it will encourage me to use domestic, to buy domestic products which do not have a foreign component. And so the adjustment of the exchange rate helps us in diversification, helps us achieve the stabilization of our economy, if I may use that word. Okay.
Okay, all right. So we have another message from one of our listeners. This is from Lillian. It said, "Good evening, Real Talk with Kike. Please, how did COVID-19 affect the increase of the price of petrol, sir?" Thank you. I think you already mentioned that. Ale?
Yes.
Yes, sir. So that's a message from Lillian.
Okay. COVID-19 could not have affected the price of petrol, not because COVID infected the petrol sector.
Okay.
What has happened is that because of COVID-19 and a sharp drop in growth across the world because of supply chain disruption, so the demand for our oil dropped, and therefore the price of our oil also dropped. And when the price of our oil declines, then we have less foreign exchange to meet our other obligations. So we had both a supply shock and a demand shock at the same time. Normally, in economic crisis, you only have one. You have a demand shock or a supply shock. Okay. That's what normally happens. But this is a very unusual situation.
All right. Thank you so much so this will be my last question to you on this first segment before we go on a break. This I believe that all you've been saying since has further advanced crisis to the import sector where I would say there are challenges or difficulties for importers to source foreign currency for payment of foreign goods. So my question is this a good sign to discourage importation and further strengthen the naira, or an approach to make imported goods affordable for Nigerians who are import inclined?
No, I don't think so. It's not a deliberate attempt. There's what we call policy response and strategic policy initiatives.
Okay.
If you are attacked by a crisis that you don't expect, you respond to it. COVID was not expected, and so we have to, and everybody in the world is responding to it. But before that, we had our own problems, and we had some policy initiatives that we had to adopt to take care of our situation. Now, the difference between policy response and policy initiation is that for example, a policy initiative to encourage agriculture, right?
Yes, sir.
Which means that we borrow anchor borrowers program by the central bank. That is to increase agricultural production.
Okay.
Right?
Yes.
Whilst the banning the importation of some things is to discourage imports. Okay, so you want to separate the two issues. Some things we initiated to deal with our structural problems. Some things we responded to because of the crisis that we find ourselves. Okay?
All right. Thank you, Mr. Rewane, for your submission thus far. This has demonstrated a critical analysis of our financial sector. We will go on a quick break and return after headline news. But first, a word from our sponsors. Do not touch that dial. This is Real Talk with Kike. All right, that was the news on the hour by my dedicated colleague, Esther, you just listened to, and the full bulletin will be heard by 6 p.m. So please stay tuned. Glad to know you guys are still hanging there. You are still right there with us. If you are tuning in, this is Real Talk with Kike. On the second segment of the show, I and our guest will be looking at the financial markets and its interplay with all these sectors in an attempt to stabilize the economy. We will also be discussing the economic stimulus plan as engaged by the federal government to provide resuscitation and stability in the recessionary period. Still with me in the studio via our phone lines is Mr. Bismark Rewane. Thank you so much for being there with us, sir, and for also sharing part of your evening with us. Again, let me use this opportunity to open our phone lines. Please join us by calling the phone line 0700 923 923. Again, 0700 923 923. And you can send us a WhatsApp message on 0817 313 6193. Let's hear your own perspective regarding all the topics that we've been discussing. And of course, we need your contribution. If you have any question, please hit us with all your queries and comments. So, sir, the monetary market in Nigeria as what would I call it now? As instruments like treasury bills and bonds that have been used in the past in stabilizing our financial system. So, my question is, what is happening now? Are they not effective, or the forces are way larger in magnitude?
Economy at any point in time. So what you see is at this point in time is an increased level of volatility because the naira money markets are driven mainly by, one, the demand by government to fund its debt, the demand by corporates to fund their foreign exchange, their LCs and other transactions, and the expansion of their businesses.
Okay.
All of these things are happening, but at the same time, we are also affected by international developments, like you said, the COVID and other developments.
Yes.
So the fact that you see increased volatility in the markets is only reflective of decreased volatility in commodity markets outside of Nigeria, which is playing in and feeding in to our domestic level of activities. That's what it is.
All right. So the IFM in April provided Nigeria a $3.4 billion rapid financial instrument. The facility is meant to help the country overcome 60% revenue shortfalls rising from this year's fall in the price of oil. Crude oil exports account for as much as 85% of government revenue. How do we remedy this shortfall that is yet to be overcome, sir?
No, let me correct one thing. The IMF facility
is
given to many countries to actually help them overcome the problems, the economic problems that arose because of the pandemic. In the case of Nigeria, because of the price of oil fell, we had a shortfall in our funding. So it's a short-term funding bridge, which, of course, when I say that, we have to pay over an extended period. But there were no conditionalities. But there was a tacit understanding that we will do things to reform our economy so that even after the post-COVID environment, we would have used the opportunity to address some of the structural problems that exist in the economy, and therefore we will not come back to the same situation we were that left us vulnerable in the first place. I think that's one thing we have to understand.
Okay. So, sir, the president said that his administration adopted 2.3 trillion economics, sustainability plan to mitigate the effect of the economic slowdown. This was the financial plan of the economic stimulus package. Why are we yet to feel the effect of this plan in our country?
Well, I think that the president made it very clear that he's instructed them to disburse the money. The first thing is you develop a plan, you get the plan approved, and then you execute the plan. What was developed initially was a plan, what they call the ESP, Economic Sustainability Plan, which has a 1-year life. And now, because of some bureaucracy, the monies have not been disbursed. And if you look at today's papers, the president has instructed that, irrespective of the bureaucracy, can you disburse this money immediately so that the sector can feel the impact? But I have to point out something that amount is the federal government plan. But the federal government activity is only about 55% of the total activity, economic activity in the country. The states and the local governments have their own role to play. So when you put everything together, and if everybody's playing their part, you will see that we would probably not fall to as deep and as low a level as we could have gone. And our recovery will probably be a little bit more rapid than it could have been. In any case, I don't want to deceive anybody. This COVID and other debilitating factors is not going to go away very quickly. In other words, we are going to cool down, stay down for a period, and then before we're going to recover. That's what we call a U-curve recovery. Okay,
just because I know that there's a dead weight loss in the current situation because the system is perhaps subsiding some segment of the economy which neither pass through to the public nor productivity. Abiola Razak, a Lagos-based financial analyst, said there are a lot of issues that we are facing in terms of the economy. So, sir, my question is, what's your perspective regarding the current situation, knowing that is affecting the economy at large?
No, everybody knows. You don't have to be a rocket scientist to know that not only in Nigeria, but all economies in the world. In fact, South Africa announced yesterday that they had a 51% drop in economic contraction in their GDP, whilst in Nigeria we have minus 6%. Both are negative. South Africa has had 4 consecutive quarters of negative growth. We are probably in our second consecutive quarter of economic growth, of negative growth. So we are in a bad place, and so it doesn't serve any purpose for us to start saying, "Oh, how bad is it?" No, we know how bad it is. It is steps being taken to make sure that one, we don't go too deep, and secondly, that we recover as fast as possible.
Okay.
I think that's what's at the problem. If not, we're going to be wallowing in self-pity, and it will achieve nothing at all.
All right. Thank you so much for your submission thus far. We have a message from one of our listeners. This is quite long. It said, "Good evening, Real Talk with Kike. Well done. This is Bolaji. Mr. Rewane, it is good to have you on the show as a member of the Advisory Council of Buhari. We have been saying diversification of the economy is the solution away from the monotony of oil revenue. Where exactly are we on this diversification?"
Well, first and foremost, diversification of an economy is a process.
Okay.
First of all, it's never ending. So it's just a question of, have you started, or are you getting the required response?
Okay.
And I say that one of the biggest ways of diversifying the economy away from oil dependence is to use the exchange rate mechanism to make imports more expensive and therefore encourage local production.
Okay.
Secondly, most importantly, is that you open up your country to international flows of currency, including diaspora and including goods. We've signed up on the African Continental Free Trade Agreement. We are part of the ECOWAS protocol. So as you open up your economy and make it competitive and increase your productivity, the economy will strengthen. But meanwhile, let me point out something.
Okay, sir.
That the economy is diversified in terms of activity, but not diversified well enough in terms of revenue. So you find that things like Nollywood, things like telecommunications, things like the payment and settlement system, the inter-switches and e-transact and quick teller of the world. All of these things are happening at the same time. So we are not the way you did business a year or 2 or 5 years ago is not the way you do business today. You cannot write checks more than 10 million. And in April, we saw the total number of checks issued in the country dropped by about 90% when there was that initial part of the lockdown.
Yes.
So there are so many things happening at the same time. The economy is in transition to becoming much more service oriented. The economy is in transition to seeing that electronic payment systems and the velocity of circulation is increasing. The economy is in transition towards a much more productive and agri-driven economic model. So all of this, when you put all of this together, the end product is going to be much more efficient than you have today. Are people right in becoming impatient? Yes, because a lot of these things we should have done a long time ago.
Absolutely.
But they say it's better late than never.
All right. Thank you so much. So, sir, this will be my last question to you. What's your parting words in terms of hope and that you want to give Nigerians that they should look up to? Because I know that a lot of people have been, leaving the country, relocating to other countries. What is that word of hope that you can give to our listeners listening today?
When there's life, when there's hope, there's life, or when there's life, there's hope.
Absolutely.
But the truth is that the longest journey in the world starts with the first mile. It's always better late than never.
Okay.
And I see a silver lining at the end of this dark tunnel,
Amen.
Which has actually challenged us. And you'll find that in another year from now, we'll be looking back and saying, okay, during the COVID period, these are the lessons we learned, and this is how we can do it much better than we did in the past. That's all I can say.
All right. Thank you so much for, throwing a lot of light on a lot of questions that we had today. Truly, your expert analysis and insight given from years of experience are really worthy of policy recommendation for the government. Again, thank you so much for sharing part of your evening with us, sir.
Thank you.
All right, sir. So our closing remark, courtesy Omoluabi personality from Goldberg, is a nation is as rich as its people. Human capital is the greatest capital we can ever have in a country, but natural resources. As Nigerians, let's endeavor to be the best in what we do. Only then can we be great to aggravate or aggregate national level peace and harmony is key. Always remember that. So this is where I draw the curtains of the day till I come your way next week. My name remains Kikeloma Tondao, and you have been on Real Talk. Bye now.